As of Monday, August 3, 2026, the stock market is currently in its pre-market session prior to the regular opening bell, with DataVault AI trading on the Nasdaq under ticker symbol DVLT at 34.3 cents per share, representing an intraday movement down 1.47% from its previous official close of 34.81 cents. Most retail traders glancing at a ticker under 50 cents immediately assume they are looking at a classic penny stock trap, a dying microcap burning cash while chasing every hot buzzword in tech. The general narrative on Wall Street is that DataVault AI is simply another struggling microcap trying to rebrand its way out of trouble after pivoting away from legacy wireless audio hardware. Market participants looking at standard investing sites see a company with massive historic share dilution, volatile price action, and a looming Nasdaq minimum bid price requirement that has traders on message boards whispering about a potential reverse stock split. That consensus expectation paints a picture of pure risk, where fundamental value is almost non-existent. The reality beneath the surface is far more complex and unexpected. DataVault AI is quietly assembling a high-performance computing data valuation ecosystem backed by enterprise partnerships, including integrations with IBM Watson X, alongside an aggressive expansion into real-world asset tokenization and name, image, and likeness monetization. While retail sentiment treats DVLT as a speculative gamble, institutional players and strategic partners are watching how its cloud-based data science division attempts to construct a commercial marketplace for enterprise data assets. If you look closely at recent trading volumes, institutional filing data, and strategic technology licensing agreements, the disconnect between public market pricing and private valuation models presents one of the most intriguing dynamic situations in small-cap technology today. When you look at popular individual brokerage accounts or track trades across the Robinhood app and the Fidelity mobile app, you can clearly see how retail money approaches a stock like this. The common belief is that penny stocks operating in artificial intelligence are all sizzle and no steak. Traders expect quarter after quarter of hype, followed by equity offerings that crush existing share value. That baseline expectation is understandable because small-cap tech history is littered with firms that promised algorithmic breakthroughs but delivered nothing beyond operating losses. Challenging that view requires examining what DataVault AI is actually building versus what the ticker symbol price reflects. When a stock trades around 34 cents with a market capitalization near $290 million, the market is pricing in near total failure or permanent overhang. But when that same enterprise secures patent protection across multi-channel data verification, launches specialized data monetization tools like Data Value and Data Score, and signs deals across biotech, fintech, and sports entertainment, the valuation gap demands a deeper look. Examining the recent price action tells a story of intense friction between short-term technical selling and medium-term accumulation. Over the past several trading sessions, daily volume on DVLT has frequently surged past 8 million shares, well above historical baselines for microcap infrastructure providers. Stock swings have seen the ticker test lows around 25 cents before rebounding aggressively toward 36 cents. On major trading hubs like the Robinhood stock trading feed and Interactive Brokers platform, high volume bursts have routinely coincided with strategic announcements, such as amendments to major licensing deals and updates regarding enterprise deployments. Much of the recent downward pressure on the stock stems from broader macro headwinds affecting speculative growth equities, combined with investor caution ahead of the company's upcoming Q2 2026 financial report scheduled for mid-August. Short interest and day trading swings have created significant daily volatility, forcing long-term holders to navigate sharp spikes and sudden pullbacks. Institutional activity reveals another layer of this story. Data from recent regulatory filings shows that institutional investors hold over 30% of outstanding shares, alongside mutual funds and specialized tech funds participating via individual brokerage allocations. For a stock priced under $1, that level of institutional presence is atypical. It indicates that while retail traders use self-investing strategies on platforms like SoFi Invest or SoFi Active Investing to trade short-term pops, larger institutional desks are positioning around the company's long-term intellectual property portfolio. When institutional capital holds ground during heavy retail sell-offs, it often signals that professional managers are looking past immediate quarterly noise toward future commercial inflection points. Comment below how many shares of DataVault AI you currently hold in your portfolio, and whether you believe their enterprise data monetization model can drive a sustained price recovery this year. To fully grasp why DataVault AI is at this crossroads, it helps to understand where the business came from and how its core operational model functions. Originally operating as Summit Semiconductor and later WISA Technologies, the company spent years building high-definition wireless audio transmission technology. While WISA established strong industry standards and built a respected portfolio of patents in acoustic science, hardware licensing alone failed to generate the high-margin, scalable revenue required to satisfy public equity markets. Recognizing the explosive demand for secure data infrastructure, leadership executed a major strategic transition by acquiring intellectual property assets from DataVault Holdings and officially changing the corporate identity to DataVault AI in early 2025. Today, the business operates through two main segments: the Acoustic Science Division and the Data Science Division. The acoustic arm continues to license its foundational HD sound transmission protocols, including WISA and ADO technologies, providing a baseline of hardware and spatial audio integration. The primary growth engine, however, is the Data Science Division. This arm focuses on enabling enterprises to measure, credential, value, and monetize their proprietary data assets using Web 3.0 frameworks and high-performance computing. Through tools like DataScore, which evaluates data quality and compliance, and Data Value, which converts technical data quality into financial metrics, DataVault AI gives companies a structured method to turn unused internal data into balance sheet assets. Their information data exchange platform acts as a secure marketplace where tokenized data, digital twins, and name, image, and likeness assets can be traded with full transparency. A prime example of this commercial model in action is their recent deal expansion with DataMeds AI in the healthcare sector, as well as high-profile talent acquisitions in their NIL Vault platform, such as signing sports icon Darryl Strawberry as a brand ambassador. By building an infrastructure that tracks, attributes, and monetizes brand engagement across collegiate and professional sports, DataVault AI is carving out a niche in an industry projected to reach billions in commercial spending over the coming years. Combined with enterprise integrations alongside IBM Watson X, the company is attempting to establish its platform as a compliance-friendly bridge between traditional corporate databases and modern artificial intelligence tools. Recent financial metrics show both the promise and the operational pain of this ongoing transformation. In the first quarter of 2026, DataVault AI reported revenue of approximately $3.42 million, beating consensus earnings per share estimates with a loss of 9 cents per share, compared to expected losses of 14 cents. Despite exceeding bottom-line expectations, the market reacted sharply to top-line figures, pushing the stock down temporarily as investors weighed the timeline for revenue scaling. Management has reaffirmed full-year 2026 revenue guidance targeting $40 to $50 million, with executive leadership emphasizing that revenue realization is heavily weighted toward the second half of the year as new licensing agreements and platform onboardings mature. Looking ahead at the future outlook, the battle between expectation and reality will define where DVLT trades over the next 12 to 18 months. The consensus expectation among bears is that DVLT will struggle to execute on its ambitious full-year guidance, leading to further share dilution or an eventual reverse stock split to maintain Nasdaq compliance. Analysts and retail traders using investing sites closely monitor the company's capital structure, watching how private placements and debt management impact overall share count. If execution lags, the stock could remain trapped in a depressed range, vulnerable to overall market corrections in high-risk technology sectors. Conversely, the contrarian bull case rests on several tangible catalysts that could completely shift market perception. The primary catalyst is the upcoming